My friends, here's a quick update this morning. Boy, my voice is shot, so I apologize. No, I don't have, I can't even mention the word. It's crazy you can't speak of what you got in this world, because if I do, I'll get a 90-day ban by you stupid crap. But anyway, I mean, this world is so ridiculous. Anyway, so here's the thing is, I did make a mental. I'm not gonna lie to you. Made a dang mental error yesterday. That should have took off half, left everything on for today because I didn't think we're gonna move off the CPI numbers. But this is the end of the year. I should have been more paying attention. And you take off half, whatever, on your positions. I held the whole thing right through, so I got the cold and also the yang, which is okay. I'm still up 2%, even after that damage yesterday. I'm still up 2% on those trades yesterday, but boy, I'm serious. I gave back over 8% return on both those together. So that's a big hit, actually. But anyway, it's okay. So the thing is, because they're still playing, there's just no excuse that, because I just, got greedy, and that's the thing, is don't be greedy in this thing, and I should take it off. I should take everything off and not hold overnight. Let me show you this line here on this S&P 500. You get that channel going here. See that channel? Right? Here is a channel. I should have brought this yesterday. You got this channel going here, right? So what's interesting about this, now we got a gap up now, because they're just shoving this. They're just dancing in the streets now, Wall Street and the CPI numbers. Okay, and I'm going to tell you. Okay, let me focus on that before I do on the charts. Here's the thing is about those numbers, that what happens naturally when you have a run of inflation, it's called demand destruction, right? And so your supply gets overrun. So what you have to do is you have to reduce your prices to deal with that demand destruction. See, these people, they're such morons, and I'm too gross. These NPCs, they think about from one day to the next. They cannot see past the horizon. They can't even see. They're so easy to program. I'm not trying to insult them, but it's just amazing. So I'm going to draw this little thing what happens. So what you have is you have a ramp in price, right? Because, because that's when everything's, with inflation, you get this ramp, all right? And then we have right here the demand destruction. Nobody talks about. I cannot believe, I've not seen one economist that I've seen talking about this. You get what's the demand destruction. You got all these goods on your shelves. You can't sell them. So it's actually a bad thing that we're seeing this pullback, right? Because now the prices are falling, right? And so guess what happens? That the demand destruction is, so the prices are falling. So you had the inflation like this. I don't know how. I should do another chart showing this more clearly. But now you have demand destruction because they're trying to loosen everything. You know what I mean? They're trying to get rid of your inventory, especially before the end of the year, because there is a tax hit even if you have things on inventory. You don't realize that, right? So you have to pay that. It doesn't matter. So you're trying to get rid of that inventory. So then you get demand destruction. So then you have this wallop again where the inflation, they're gonna be missing on that too. We don't know where that's gonna end up here though. We don't know, because eventually you get demand destruction, right? So that's what's not being mentioned. So it doesn't matter, because they just make up the numbers anyway. You know this, right? It's all fake. It's like, seriously, you don't know. This world is so fake. We don't have no idea. So it's actually useless. I'm just saying that if you try to put logic behind this world, which you can't, you would say that the prices are actually down because of the demand destruction, but they're not talking about that. Okay. All right. So let's go back to just playing the charts. We don't care about the noise, but it is important to see, because I told you how long the theme's going to run now, and how that theme might be tried to be twisted in the future, that we're trying to see this. Okay. All right. So you got that gap now, which is a beauty, because now that thing can be shortable in the future, though. You got to be careful now. We still have not filled this gap down here, which is surprising. There's a gap there. Boy, that sucker's going to come down. So, if you had a more longer-term position, now you got two gaps up. And boy, that's a beauty on the short side. But this ain't the time, because we're probably heading into the Santa rally. Now, that's what I'm going to say, which is odd about this. I'm just putting my thoughts out, because this is a tough game. It's a mental game and also a thing. That when you have the Fed meeting tomorrow, which I'll be out of positions on that. Do not hold until those Fed meetings, because go the way. Now I'm stepping back, going, wait a minute. Because I expected them to hit the numbers, the CPI, lie, or adjust those. Now they've preloaded the Fed meeting. Now that is, trying to hit with two belts. Is, they're trying to smack the market twice with positive stuff. The Fed comes out and does. They're gonna do exactly that 0.5, hit, but it's in their words. They'll try to spin that thing. Well, they said, we've seen it cooling. Now everybody knows. They said, even what they said that's cooling. Now it's not going to matter. See, they just took away a lot of the punch out of the Fed. So now they switched it over today now. So now the Fed is almost, so that's what gets weird about this. Now you got to really be careful on the bull side, actually, on the Fed day, because you know what they say is you're going to have very little. I'm trying to think if there's anything they could say that would be, it's more dangerous to be on the bull side than it is the bear side. And I was thinking going into it, it'd be more dangerous on the bear or the bull, right? On the flip the coin. Well, anyway, so we got the 200-day moving average 2 here. Sorry, my voice is just terrible. That blue line. So that provides a gap to come back and test that thing. So even if it starts to level out right here, the 200, you're gonna get hit off that. So you're gonna see positions being taken on this thing. Timing's always good. Also, I guarantee you watch that thing is gonna come down and smack that 200 minimum, and it's gonna come down and fill those gaps. And then we have to go from that 200 to see how she plays out. Now look, we still have the MACD up here where it was overbought, and the purple setting too. But you're gonna get this entanglement. And it should come down later here like this. Okay, that's assuming it's so hard because we're in a Santa rally situation, and I'm trying to gauge how this thing, if they're gonna just kind of pop it back and forth here or what. I'll be honest, I'm gonna have to do more analysis today. Look at some other numbers, RSI, relative strength, and things like this. Okay, but so this like I said, if you're long term, no matter what, you're still probably gonna clear that position. And anyway. All right, so that's that. And VIX, the problem is too, VIX is too high. So VIX. Oh my gosh. So what I'm saying is, for a good clean setup, for a good clean setup, it's a tough one right now. I'm saying I'm not seeing anything clean on either side other than, unless you want to take the risk of the bear temporarily. This one's a tough one. Now VIX, I told you, is too hot. It's too hot. So this is no surprise. It's running a little bit hot, and this chart is not up to date because the VIX immediately came down. It said 10% jump on this thing this morning. It's already down. It is already down. And yesterday it looks like it did hit the 50 bound by perfect. Whoa, geez. I didn't notice that. It's the green candle here. All right. So now you get the VIX. It's actually pre-market because they're not going to have the pre-market. It's floating down here now. So it's trying to fill that gap. We talked about yesterday that gap needs to be filled on the VIX, so they're probably going to fill this thing out here, but it's still trading around 25.18. I think it's still in there somewhere this morning. Yeah, because they're somewhere in that 25 still. It's still hot, right? But it's got this momentum up. See, I think it's going to try to start rolling down or fill this gap soon. That's what I'm still saying. You're like, well, Kirk, you're all over the damn place. Well, this is rare because sometimes you're in that you're in the 50-yard line, and sometimes it's very clear, and sometimes you're not. So I'm gonna have to think about this. This is not a great video as far as direction, but it gives you how much of a mess this is, right? Let's see, and then we have, what else did I have? I was gonna show you. So we did that. The Yang still. I like the Yang. I might hold that one still because I need to think about this and hold it through the pre-market. It's showing it down. Yeah, see, it's until they took a smack on this. Let's see, the Yang. Let's see, what's it trading at? What's it say pre-market? Darn, where's the price? Oh, 1263. So yeah, you can actually see it down there, right? Now this gets bad because I told you that here's what I don't like on the side. As you take out that candle there, the green one. And even a double bottom, if it tries to double bottom that today, boy, that's not a good sign because double bottoms always get broken later, okay? But we still have that. It's flattening here. The MACD is starting to kind of curl up. Oh my gosh, my thing's that. MACD see how that it's trying to curl up and start move up here like this. So, I mean, the problem is all the markets move together. I'd say that the Yang is still a good hold if you want to be on the long side compared to anything else. I'd say that if you really want to be long, I'd stick with the Yang versus the SPY, the other ETFs on the long side, right? But anyway. That's yeah, because like I said, you got a gap up here between that green and that red. You got a gap up, and you get so many gaps. I mean, look at this. I mean, it's just sick and disgusting that all those are gonna be filled. I mean, seriously, whoa. I mean, just unreal. So the Yang is probably a good one. See, KLD. Oh, so I don't know. I'm just going to check a quick one. I know you probably do the things. I'm still going to watch those Treasury now. The Treasury should be taking, this thing should be taken off this morning. Yeah, 7%. Boy, I missed that sucker again. Look at that. I knew that before and looked. That, oh, UBT, boy, I tell you, that is the trade. And that really, darn, boy, that's, it should have been more diversification like that. I could use that as a darn hedge. That sucker just has gone up there again. What's it saying pre-market? Darn it. Ah, shoot. What's that? I can't see what it is. Darn it. Because now that sucker is on a rip. That one is where it had the W pattern, blah, blah, this and all that, took off, right? Boy, it did a very small trace, like I said, and then it shot up, right? Look at that. Wow. And, woof. You know, that sucker is hot. See, now that's what's funny about this. The KLD was the hottest trade. It was, last week and for the whole month that they had the highest return. Now KLD is going flat. It's like average. It's still up, but it's not become the hottest trade. At this rate, Boyle might become the hottest trade. But anyway, let's see what else. There's something I'm going to show you too. The pattern what I missed on, I'll do one later. Right? Let's see how this goes, and I'm probably just gonna bow out and just, like I said, take a small profit at flat on this. It's lightly like a 2% up, and I will not be going into that thing tomorrow. No way. Wait till it does settles. All right, that's pre-market, and hope all is well. Take care, my friends.